And welcome to the latest in my series of good news bulletins. The latest data about house prices was published today with the new figures from SQM Research showing that 6 of the 8 capital cities have recorded some level of growth during the month of June. Perth is the leader this month with its house price index rising 1.3% in June, followed by Darwin at 1%, Canberra with 0.9% and Brisbane 0.8%. The news media, however, will no doubt focus on the results for the 2 cities where prices fell in June, namely Sydney and Melbourne, because, as we all know, they're the only places that truly matter in Australian real estate, and besides, it's a negative, and that's what media likes to focus on. Now, in terms of annual changes, house prices remain higher than a year ago in all capital cities except Darwin, led by Sydney, which is still up 11.5% for the year despite a small decline in June, and Hobart, which is up 10.4% on last year, and then Melbourne, which is up about 10% higher than a year ago despite the drop in the month of June. Nationally, house prices are 6.3% higher than a year ago, and apartment prices are up 5% compared to 12 months ago. And the overall impact of the SQM research figures is that real estate continues to defy the predictions of major falls in property values. We've been in the COVID-19 period for over 4 months and still no sign of property values falling off that proverbial cliff that the attention-seeking economists like to talk about. Looking to the broader economy, Australia is forecast to be one of the world's best performers through the COVID-19 period. The International Monetary Fund, in its latest World Outlook, has revealed the pandemic will lead to a 4.9% fall in global economic activity in 2020, but Australia, alone amongst the advanced economies, will suffer a milder than anticipated GDP contraction of about 4.5% this year, down from an April prediction of 6.7% drop. The IMF said that Australia is one of the few exceptions where March quarter growth wasn't worse than expected. This reiterates a recent strong rating of the Australian economy by the OECD. Meanwhile, Australia is one of just 10 countries to retain its AAA credit rating through the coronavirus-induced global recession after Moody's Investors Services affirmed the rating and maintained its stable outlook for government finances. Moody's says that Australia's AAA stable credit rating reflects the economy's strengths and good governance, including health management, that will support the country's resilience in response to the coronavirus pandemic. Moody's forecasts that the economy will shrink this year, but says the government's budget spending and also support from the Reserve Bank of Australia will mitigate the severe contraction. It says of Australia, the fall in GDP is smaller than in other advanced economies in general, consistent with signs that more normal work and spending behaviours are gradually returning as the epidemic recedes in Australia. And it says, in Moody's assessment, the resilience of the Australian economy supports a return to positive growth next year without any significant long-lasting impact on growth potential once the crisis passes. Returning to events in the property market, millennials are at the forefront of house hunting around the country as real estate agents across the nation report a surge in first home buyers looking to take advantage of the high level of government support that's available at the moment. Real estate experts say young professionals and couples are busy looking for opportunities to buy in Melbourne, Sydney, Brisbane and elsewhere, in many cases boosted by the Home Builder grant from the federal government. The reports come after CommSec released its economic six-pack charts for June, which revealed active first home buyers reached a decade high level earlier this year. And that momentum has further risen throughout the pandemic and could rise again, with the federal government's first home loan deposit scheme to reopen in July, which starts tomorrow, with another 10,000 places available under that scheme. The first 10,000 places were made available in January, which opportunistic first home buyers snapped up in a matter of days, and the second round of government support starts this week. In fact, tomorrow, the 1st of July. With so much government support around at both federal and state levels, it's a very good time to be a first home buyer. And of course, the low level of interest rates makes it even better. Now, the weekly auction figures continue to show a market that is turning over steadily without really surging, which is pretty much what I would expect in the current climate. Last week across the nation there were 1,424 homes scheduled for auction, and there was a preliminary clearance rate of 65%. This was the highest number of auctions held in 9 weeks, demonstrating an ongoing improvement in seller confidence as auction clearance rates hold reasonably firm under the increasingly higher volumes. In comparison, the previous week saw 1,251 homes taken to auction, returning a preliminary clearance rate of 66%, which was later revised down to 60% with the final figures. This time last year, 1,295 homes were taken to auction across the capital cities, and the clearance rate was 63%. So the current results are fairly comparable to a year ago, despite the impacts of the current COVID-19 period. Now, Brisbane's residential property market is weathering the coronavirus storm fairly well, flying in the face of fears that house prices would plummet, and that's according to new research from the Real Estate Institute of Queensland with its quarterly market monitor, which reveals that the median house price for Brisbane, the Brisbane local government area, has risen 1.5% in annual terms to $690,000, while unit prices have increased 1.2% to $420,000 as a median. 12 suburbs outperformed the overall market, achieving double-digit house price growth over the 12-month period. Fig Tree Pocket was a standout. The median house price in this western suburb jumped 36%, followed by Milton 35%, Windsor 25%, and Seven Hills 22%. And in terms of median apartment prices, Bulimba rose 22%, followed by 17% in Murarrie and 15% in Morningside, and all three of those locations are in the eastern suburbs of Brisbane. REIQ Chief Executive Antonio Mercorello says Brisbane is on track to be one of the best performing property markets in the country over the next few years. And it's worth noting that the new figures published by SQM Research today show that Brisbane prices rose 0.8% for houses and 1% for units during June, and in annual terms Brisbane prices are up 4.5% for houses and 2% for units. And for the final word today, here's some news from two major businesses that are booming during the pandemic, not despite COVID-19, but because of it. Amazon is plotting a major expansion of its Australian business with plans to build one of the country's biggest warehouses in Western Sydney, and searching also for a giant warehouse in Melbourne. The local expansion plans come on the back of surging online sales due to COVID-19. Amazon's entry to the Australian market 3 years ago has been described as underwhelming, but the retailer is slowly but surely taking market share, with its most recently filed account showing an almost doubling of revenues from its Australian business in 2019. And meanwhile, Atlassian has outlined the design of its new $1 billion headquarters in Sydney, which reportedly will be the world's tallest hybrid timber building built to date. The locally based NASDAQ-listed software company has confirmed plans for its 40-storey Sydney office tower next to Sydney Central Station. It will be the flagship project in a New South Wales government-backed technology precinct that will ultimately link Ultimo with Redfern on the CBD's southern edge. It will sit next to a $2.5 billion Central Place Sydney project, which is a twin tower development by Dexus and Fraser's Property Australia. Atlassian will be the major tenant with 4,000 staff in that office tower. And that's it for now in terms of the positive events in the economy and the real estate market across Australia. But before I go, a reminder that we published today the new financial year 2020-21 edition of our most popular report, the National Top 10 Best Buys Report. As a special offer to mark the end of the old financial year and the beginning of the new one tomorrow, we're offering this report at half the normal price. And you can check it out on the new hotspotting.com.au website, which we launched last week. That's it for now. We'll do it again really soon. Bye for now.